Eric Mwathe at mwathe.com. Today I want to take a look at the uniformity method, which generally gives us an idea of how a stock is going to behave in the future once we ascertain where it broke down or where it started moving higher. In this case, we had a bearish break here for LL at that level there, and so we can draw our uniformity line. I'll keep the color in red because it's a sell signal line, and I'll draw it around there. Now, number one, this line is legit just because also we have the fact that it's around 61.8, so I'm talking about this red line. But what I want to discuss in this video is this uniformity method works best when a stock is below the trigger point sell signal. So here is a trigger point right there, and so any subsequent sell signal is going to be lower because the stock obviously is well below this point here. So sell signals are going to be reliable. For example, here you can see that it had a nice move lower. Here we have two instances above the red line and back below it, and then again coming and touching it there for the sell signal there. We touch the same line there for that sell signal. Here we have two instances where we have uniform activity, number one, number two, and we come back and make a high around those levels. And as of the last 3 days, we hit that level, and today the stock is down 20%, also down 20% because it's moving its daily RSI below 50. So what I'm trying to get at here is the uniformity method is reliable for the most part when the stock is trading below the trigger point for a sell signal uniformity line. And just to change this up a little bit, I'll show you what I mean. Here we have positive uniformity line, which is a buy signal, so I'm going to give it a green color just to show that it has been used by the market as a buy signal. So it's a green line there just for reference, and you can see that once we moved above this was reliable on the weekly chart because all these buy points touching the green line are coming at a higher level based on this low here. So since the low here, obviously the test of this line here, double bottom test, came at a higher level, so that was a more reliable buy signal, higher level on price as it was testing the RSI. Here we see that we can even say this was close enough, did not get there, and it is happening of course at a higher price, again at a higher price, which is a reliable buy point support here, again at a higher price. And so we can see that it led to a couple weeks to the upside, and now potential for this being a double bottom, kind of like twice, initial support back the uniformity line, and again doing its best to have double bottom support there. If that holds, and given the fact that this green line goes all the way back to this low, any uniformity around here is still gonna be good, reliable support. Why? Because it is happening above the initial buy signal. So from time to time you'll notice that you get a line that is based off uniformity line, and yet the stock is moving above. So in essence what I'm saying here, so just give me a second here. So let's say, see how we do this. So the price is going higher, prices makes a low, comes back, and while all this is happening, so I'm just going to keep it as simple here. Let's do that. And so let's assume this is the RSI. So this is, here's price. Yeah, try drawing, writing that with a mouse, it kind of hurt, but anyway. So RSI, and so let's just say that the RSI was doing something, broke out here, went all the way back, came back, tested that, uniform action, came all the way back, double bottom support at the line, and again here. So all these are good entry points here because it is above this low here. So again, double bottom, nice support, double bottom, support their uniformity line because the prices are higher. Based on what? Based on this entry. Based on this entry, this is off this breakout. So anything above in price above this level here and coming back and showing uniform activity support on the green line is a good support. I hope that makes sense. It's a little bit confusing. Now I'm going to change colors here and show you the other idea. So if the stock went up, instead of making a low here, if it went lower and try to move higher, any type of support with uniform here, any type of support with uniform action, since this is lower, would be a less reliable buy signal. So the buy signal works when the uniformity line is above the trigger point. And you can flip the script here for sell signals. And I guess the best one I can show you is just the one that I discussed in a recent video, because that's the one that's coming, at the top of my head. That makes good English. And it is on the daily for UNG currently. You can see what it's trying to do here. We had a move, so you find where the move began, and there's a slight node right there, slight, so we can draw that, connecting that node right there. And right now you can see it could have uniformity support because we came from the lows here and went higher, right? But now we've come back and we've made a lower low. So what I'm saying is any type of uniform action now here is not going to be as reliable. Why? Because we are lower than the trigger point. I hope that makes sense. Because we are lower than the trigger point, it's not a reliable sell signal. Just like I mentioned in the previous video, reliability on the uniformity principle comes when here we have a trigger point for the highs there. So we know that from the stock's trading history. We are not trying to cook this. We are using the stock itself to tell us how to look at the stock. We draw a line from there. And so because subsequently all the signals, for example, this nice uniformity action was at a lower price as compared to the trigger point, it is a more reliable sell signal. Again, lower than the trigger point. So this here was a nice reliable sell signal right there. And even we can say that this was also reliable sell signal because it is below this point. Now if the prices had moved above, let me just explain that again. So if the prices here, instead of going down actually and making a low here, if the prices had gone higher, this would not have been a reliable sell signal. Okay, so just keep that in mind. I need to stress this because sometimes we can get confused on when to use the uniformity principle. You can use it as long as the trigger point is for the bullish. So I want to do this one more time. Please bear with me. It's a slight distinction, but it bears repeating. So how do I do this? So for sell signals, so uniformity line, so that's the uniformity line. Assume you already got your RSI uniformity line. This is gonna work. So for sell signal, so sell signal, sell signal, sell signal, triple bottom, triple top, sell signal on the RSI. If it's gonna work, if the prices continue making lower lows based on the trigger point here. And the same can be said for bullish. What's funny is that I was gonna make this a 2-minute video. Well, that's funny. Turning out to be a long video. So it was meant to be a 2-minute video, and here we are. Anyway, so for the buy signal, uniformity line, that's uniform action. Even that is uniform action. It's 3 times on the line. If you split each of this uniform action followed by another uniform action followed by another uniform action, and then maybe let's make another double top, double bottom, or even something like that is uniform action in my world. This is gonna work the best if the price is higher. So off the lows here, let's call it like that. So all these buy points are gonna work if the price is high. So the buy points would work off this trigger point. Uniform action, buy signal, All this is uniform action put together. Buy signal here, double bottom here, buy signal there, dome type, support there with uniform action. That's an entry. Now if the prices had gone lower, let's say instead of going up they had gone down and were trading the same way but lower, right, lower than the trigger point, then this any type of buy signal here would not be reliable. This here would not be reliable. Why? Because it's below the trigger point, and the trigger point is based on this point and that point. I hope that makes sense. Sometimes it's hard to explain these things, but I trust you do. So anyway, just make sure you don't use uniformity blindly. Just try and make sure that if it's a sell signal uniformity line, your sell signal comes at a lower point, as opposed to, so just keep that in mind, that uniformity lines are relative and they are useful if they are above or below trigger points, based on whether they are positive uniformity lines or bearish uniformity lines. I'll stop right there. Eric Muadhet.com. As always, good luck, peace and blessings. If that did not make sense, shoot me an email and I will do my best to elaborate further. I am out. Mwah.